Hello everybody, welcome back to another valuation investing video. And today in this video, I'm going to be going over Novo Nordisk stock and why I believe Novo Nordisk could see a nice rebound in the future and why I think this stock is not done going up, because over the past month, this stock has seen some decent gains, but still the stock this year is down over 50%, I believe is about 50%. So with that being said, let's get into this video and see why I believe Novo Nordisk could be going higher in the future and why I believe Novo Nordisk is undervalued right now. So let's get into that. Taking a look at some big news for Novo Nordisk today. Actually, this company, Novo Nordisk, just bought Akero for up to $5.2 billion as new CEO bets on liver drug candidate. So this just happened today, where for up to $5.2 billion to gain access to a promising liver disease drug candidate in the first major deal by Novo Nordisk with the new CEO. So he just took the helm at the Wegovy maker in July and has been tasked with stemming market share losses to US rival Eli Lilly. And they also just cut 9,000 jobs. So I think this new CEO is starting to look like he could be changing the company for the better. And with that being said, he said the company would focus on developing the next generation of highly effective obesity and diabetes drugs that can also treat related cardiometabolic conditions. So with that being said, I believe that this CEO is looking like it's trying to actually turn around this company with the increased competition from other people like Eli Lilly, and a lot of other companies are trying to get into the weight loss space. So with that being said, let's get into why the stock is down so much though over the past few years. Taking a look at why Novo Nordisk is down, first we have the increased competition, particularly from Eli Lilly. Eli Lilly's competing obesity and diabetes treatment like Rebound and Mounjaro are proving to be strong rivals, leading to investor concerns about Novo Nordisk losing market share. So if we go ahead and take a look at Novo Nordisk stock, over the past month we've seen 8% gain. However, looking at the past year, the stock is down 50%, nearly 50%. So this company is doing very bad for investors over the past year. And I think that is the main reason, because of the increased competition. Another reason is slower than expected sales and guidance cuts. The company has at times lowered its sales and profit forecasts, citing a slower uptake of its obesity treatments and other pressures. Also, analyst downgrades and concerns, competition from compounded drugs, the sale of cheaper compounded versions of the active ingredients in Novo Nordisk GLP-1 drugs is seen as persistent threat, potentially limiting the company's cash pay market. Also, we've had some setbacks in the pipeline for Novo Nordisk. Concerns have been raised about the effectiveness of the company's experimental treatments in other areas. And also strategic acquisition costs. A recent announcement of the big acquisition of Akero Therapeutics for its promising liver disease is expected to increase R&D costs and negatively impact 2026 profit growth. So I think these are the main reasons why Novo Nordisk is down. If I had to say the main reason, obviously the slower than expected sales growth, but where does that come from? I think it comes from the increased competition from Eli Lilly, and I think that's the only problem I have with Novo Nordisk. Everything looks good fundamental wise, but the problem is the competition in this space is going to get worse and worse as it goes on, because we see this as a huge opportunity for businesses. We know that the drugs for weight loss is going to be huge in the future. So why wouldn't other companies want to get into it? That's the biggest problem I have. Novo Nordisk is the front runner, but will it be for the rest of time? Who knows? And that's the problem, and the problem we have for the future. We don't know that for sure at all. So that's the reason why this stock, I believe, is down so much, because when there's uncertainty in the market, that's when stocks don't do well. Not even necessarily when the company's not doing well, it's more when there's uncertainty, because it's hard to predict the future. If you have a company that's easy to predict, then the stock is going to do very well, especially if the fundamentals do well. But taking a look at the future growth for Novo Nordisk, where this could potentially come out of. First, we have the obesity market dominance with Wegovy are the primary engine for future revenue growth, capitalizing on the anti-obesity medications. Also, we have diabetes franchise with strong sales of Ozempic and Rybelsus are expected to sustain its diabetes market leadership. Also, pipeline advancements are helping and new indications of GLP-1 drugs. I believe that Novo Nordisk is the front runner for these weight loss drugs, and I think for the future, we don't know about how this will plan out. I still think Novo Nordisk will dominate, but will they lose market share? I think 100%. There's no doubt that this company will lose market share in the future. Now, if we go over to my valuation investing website here, if you want to go and check out this website, you get a 7-day free trial. It's called valuationinvesting.money. Or just click the link in the description. But let's get into Novo Nordisk. So looking up Novo Nordisk stock here, if we go over to Novo Nordisk here, as we can see, the stock's down about 1.78% today. Market cap of $40 billion, so the valuation of this company is pretty cheap compared to some metrics. As we see, the PE ratio, 14, that's a very cheap PE ratio. That means you're paying $14 for $1 of earnings per share. The market average is about 25 right now, so this is a very cheap valuation. You want the PE as low as possible for the good growth rate. However, just because the PE ratio is low doesn't mean we should be buying. You have to put the PE ratio combined with the growth rates, because say this company was expected to grow at negative growth rate, then why would anybody want to buy this company, even with a low PE ratio? Now, for the price to sales, this is also very cheap, less than 1, meaning they have more revenue than their market cap, so that's very good. Their price to book at 1.5 is also very low, and the free cash flow yield at over 10% is insanely high. The average free cash flow yield is around 3%. And with this means you're getting 10% of, if you buy Novo Nordisk, 10% is free cash flow. So you're getting a very high yield on the free cash flow. The only thing I don't like here for Novo Nordisk is the net cash. As we can see here, negative $12 billion in net cash. So they have a lot more debt than their cash, which I don't like. The only other good thing here is, though, the dividend yield at almost 3%. Normally, I don't like dividend yields, but since the company is expected to decelerate in the future, I kind of like that. Now, for the 7-step stock analysis for Novo Nordisk here, we get 6 out of the 7 key metrics. We get the forward PE ratio, obviously less than 30. Return on invested capital at 30% almost. Very good at reinvesting back into the business. The revenue growth looks very good. The EPS growth looks very good. The shares outstanding also decreasing pretty well. The only bad thing here is the debt to free cash flow at 3.8. This just is telling us that they have 3.8 times more debt than their free cash flow. So it would take them almost 4 years to pay off all their debt with the free cash flow they just made last year. So it takes them a bit of time compared to some other companies, but it's still not bad. And take a look at the financial charts here. The revenue growth, like we've said, looks very good. EPS growth, very good. We want to see the EPS growth growing. The only thing that's not good here, I think, is the debt number continues to go higher. So that's the only thing I don't like about this company. So with that being said, keep that in mind when doing this calculation. Even though this doesn't calculate with the debt, you just have to keep that in mind when we calculate our intrinsic value calculator. But first, let's do the bear case. I think bear case, Novo Nordisk will grow 6%, base case 9%, and then bullish case 12%. I think we're definitely going to see deceleration in growth for Novo Nordisk. They're growing at about 20% over the past 5 years. However, as of late, they're expected to grow about 10 to 15% in the next year. So I think it's going to continue to decelerate as time goes on with more competition in this space. Now, for the future profit margin, right now their profit margin is at about 35%, as we see here. But I do think that this is definitely going to decrease in the future. The only reason I believe that is because of the increased competition, and as there's more suppliers of weight loss drugs, that's just inevitable for this to happen because of all the money Novo Nordisk has been making. A lot more companies are going to try and get in. So as more supply is there, automatically the price has to go down for these weight loss drugs, and then that's in turn going to automatically decrease the profit margin. So with that being said, bear case, I think this company has a 27% profit margin. For the base case, I'm going to put 31, and then bullish case 34. Actually, let's do 35. Let's say bullish case, it remains the same. So I think bullish case, it remains what it is today. Now for the future P ratio growing at 6%, I believe a good P ratio for this company would be 15. Base case, I'm going to put a 20 PE ratio, and then bullish case, I'm going to put 25. Now, for the shares outstanding, I think they're going to be buying back at 1% bear case. Base case, they'll buy back at 1.5%. Bullish case, 2%. And with the intrinsic value calculations here, I get a 13.7% return with Novo Nordisk. So with that being said, I'm very close to buying this company. I do think that in the future, we're going to see good growth from this company due to the weight loss drugs. But the biggest thing having me up against the fence here is because of the increased competition in the space with Eli Lilly, Pfizer getting into the space, probably other companies, maybe even Merck, I'm not sure. I know Pfizer is definitely trying to get into it, and Eli Lilly's already a huge competitor. That's the only problem I see with this, and also drug companies are harder to predict for the future with their future pipelines. But with a 13.7% return, this looks very intriguing. And I think if it got under $55, I would definitely be very interested in buying. I think this is very close to being a buy for me. I might wait for their next earnings report and definitely make a video on that to see how it turns out. And if it doesn't turn out as bad as thought, I think I might be buying this company. So thank you guys for watching this video on why I believe Novo Nordisk could rebound in the future. And if you guys want to go check out the Patreon where you'll get access to this entire website, just click right here. There should be a button right there. Click that. You'll get access to this website, 7-day free trial. Cancel anytime, and it's only $8 per month after that. So thank you guys for watching, and see ya.